right, good Thursday morning for the 4th of April. Welcome to the Hurley Investments Trade Findings and Adjustments. And I found this question pretty interesting after the market view that I did, or market commentary that I did on Monday. A lot of people asked me in a couple different areas, what was I thinking? So today I want to focus on what I was thinking and what I'm looking at when I'm running my portfolios, because a lot's happened. If you listen to the market commentary, my goal this week that I started last Friday was letting some things run into what's going to be a China deal. And my expectation was, hey, I'm going to be prepared to catch a big run up. And then as soon as that run up, as soon as that China deal is announced, I'm going to start protecting. So the short answer is letting things run until the China deal is announced. And then I'm going to take profits. And I can't spell. Take profits and protect. I think it'll be a short-lived bounce. I think the market is really going to be too negative after being too positive. I will be honest with you. To truly understand, you have to attend the market commentary in both trade findings and adjustments. I post those as quickly as they get approved on Facebook, on Hurley Investments, or on www.myhurleyinvestment.com. And when people start talking about what I'm doing, I'm just going to point this out. My way of trading in the market is the best. At least if you ask me. And it really comes down to there are 9 different ways to skin a cat. And all I mean by that is that it's like golfing. Who was it? Oh, he's skipping my name. He just retired. He's related to Summer Hayes. Can't remember the announcer, but he just retired. He was a pretty good golfer in his own right. And one of the ways that he would warm up or test golfers, God, I really wish I could remember his name. One of the ways that he would do that is he would, I had my phone, I'd search it on my phone. He would maybe go out 100 yards and he would use everything from a lob wedge out to a driver. And he would hit balls 100 yards out on a green using every single club in that range, maybe, minus the putter, and just getting a feel on how to move each club 100 yards down the fairway. Whether it was a driver, a 3-iron, a 3-wood, a 5-wood, a 5-iron, a 7-iron, a 9-iron, a pitching wedge, he could place any club 100 yards down the fairway. There are many different ways to trade. And really what it comes down to are 2 things. How much risk are you willing to take for the desired expected / hoped for results? So if I can throw this your direction, if you are in stock ownership, what is your risk in stock ownership? If you are in stock ownership, what is your risk in stock ownership? I saw 100%. I saw every penny, every dollar you have invested. All 3 of those answers are perfect. everything. That's a good answer. Now, in theory, the stock won't go to zero. But in real life, stocks have gone to zero. There's a difference. There's a difference in theory, and there's a difference in real life. And that difference is, can your risk tolerance handle the time frame it takes to be right? And it's funny because a lot of people put a trade on and they love it. They love the numbers. They love the way it looks. Sorry, as I just knocked that over. The trade looks phenomenal. It seems phenomenal. Sorry, gonna move a bunch of stuff on the desk. It's a great position to be in. And then the first day goes by and the trade doesn't look as good anymore. In fact, the trade looks pretty awful. You may have been right. You don't know if you're right. You don't know if you're right until the trade ends. And the trade ends two ways. Maybe three ways. For a loss, a break even, or a profit. Which equals a 33% or 1 out of 3 chance of making money. They're simple numbers. The numbers don't lie. Those are the numbers that you're dealing with. Those are the numbers that make everything the way it's supposed to be. So, what's the risk in an option debit spread? What's the risk in an option debit spread? Perfect, the debit. And an option debit spread, you can't lose any more or any less than what you put into it. Now, you've capped yourself in a debit spread. You can only make the difference in two strike prices minus the debit. What if you use a long position? What is the risk in a long position? Let me take that back. What is the risk in a long option position? What is your risk in a long option position? A long call, a long put. The right to buy a stock at a certain price for a certain period of time. The right to sell a stock. There you guys go. Out of 13 of you, we had 7 of you just type in the cost of the option. You are exactly right. But that also means you have 100% risk in your investment. Just like stock ownership, 100% risk in your investment. But that risk is usually, even if you're going to use the leap, somewhere in that 10 to 16% range of the total cost of the stock. Maximum reward for a long put, the strike price down to 0. Maximum reward for a long call, it's unlimited. And the last one that I'm going to kind of tease you about, what is your maximum reward or your maximum profit in a credit spread? What is your maximum reward in your credit spread? There you guys go. Perfect. 5 quick answers. The credit, right? And you want to know a professional trader from an amateur? A professional trader from an amateur? A professional trader will tell you in a credit spread that the risk should be no more than 2, 3, maybe 4, 4.5 times the reward. What do you think the amateur trader tells you? What do you think the amateur trader is going to tell you about a credit spread? I get paid to play, baby. And it's funny because a lot of time when they get paid to play, they're going to be taking a nickel, quarter, dime, 50 cents on a $10 spread, a 19-to-1 risk to reward ratio, 19 risk for every reward. Ugh, not good. Not good at all. So let's talk a little bit about what I have done. Visa. Yesterday, I rolled short calls on stock ownership up to a September 170 strike. Is there an opportunity? Yes, you can definitely buy to open shares of Visa and add a September short call for roughly $4 and I'm probably going to tell you 10 to 25 cents of credit on that short call. And for that short call, just for those who don't know, you're going to sell to open that one, right? It would be a great trade right now, going out to January 2020, June 2020, January 2021, 160, leap, long call, should be an excellent long-term investment. But if you can afford to do 10 contracts, start with 3. So you can dollar cost average twice. But Kevin, if you dollar cost average, 3 and 3, you're only going to have 9. We're probably going to do 3 and 4 or 4 and 3. You don't have to dollar cost average equal amounts to the contracts you have. Just like you don't have to dollar cost average equal amount of shares. Some people think, oh, I can't dollar cost average. I got 1,000 shares of Visa. Well, if you could buy 200 more, that's 20% more shares that you're adding to lower your cost basis. Right now, with a little off day, Visa was off just a couple. I really wish I had. Well, what am I worried about? Let's look at where Visa's at. Come on. There we go. Ooh, S&P's now down today. Nice to be up pretty good. Visa. Sorry, guys. Thank you, Abraham. I will get that fixed. Visa today is down. Should have waited till today to roll, but down $1.62 at 156. Purchase price for Visa with a China deal and being able to pick up maybe 200 million more clientele. We don't have Visa Europe built into their numbers. 171.50-ish. 171.50-ish is a stretch on valuation and earnings. Visa right now has $15, $16.50 to the upside. A pretty good upside opportunity on Visa. It'd be a good position to get into. It would be a good position to move off to in Visa. It'd be a long-term one, but it would be a pretty neat opportunity. Boeing last night, working with NASA. News that they were moving forward with a software fix with NASA's help. After hours, they popped up $8. I tried to set some orders. Let's see if I can't get some of the pictures I had so you can see where I was at. And kind of a bummer, I have some orders not getting filled today that should have gotten filled, which really bothers me. All right, let's see where we're at. I took this one. This is pretty basic for me. Pretty basic. That's my position for all intents and purposes. Not bad, because for 270, I was up to 285. For 525, I'm up to 670. What you're not seeing, and to be 100% honest with you, some who placed a trade shorter term, April, exited with a 10% loss yesterday. And some in April that were at the money. So at the money was 375, 380s, or the 380, 390 took a 20 to 23% profit. Pretty nice to be in them. With that said, I just took some ones that were getting filled. And again, I got some that are not getting filled, which is really frustrating. We did have some fill orders. It looks like a quantity 7 accounts when it's all said and done. But some that filled at 488, they're now worth 590. Some that were filled at 615 are now worth 770. Some that were filled at 475 are now worth 590. And these orders were put among 7 different accounts. Kind of frustrated, and I'm not sure why, but in some of my IRA accounts, which also includes my IRA account, for crying out loud, we had some orders that did not get filled. And it's kind of frustrating because I'm trying to figure out why. But some 390 400s were canceled. And they were canceled in 6 different accounts, which really ticks me off. I'm not sure why those were canceled, but some of them was because of the spread and the margin that was available. So 6 IRA accounts, SEP IRA accounts, Roth accounts, including my own, were not filled with these positions. It's kind of a bummer because in my personal account, I was more than willing to go into some margin. And for crying out loud, I'm not filled my personal account on any freaking any Boeing, which is ridiculous because I've got about 4,000 in cash. Bank of America, I've dollar cost averaged those, and I am ready to start to take a profit on some of those. Bank of America, when it gets to, basically when Bank of America will get to 30, I'm going to lighten up. And I'm not lightening up because of a technical reason. I'm lightening up because I like booking profits, because it's been in a channel where it's hit 30 and it's come back down, which is pretty nice. It doesn't always work this way, but I hit this one pretty good. 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 So for those of you that want to be in Boeing, Bank of America, wait for it up around 30, wait for a drop down. If you do any type of trend lines, right? If you're looking at any kind of trend lines, you've got a bit of a downward channel, which means it'll probably take earnings to bring it back. With that said, I'm going to lighten up, but I'm not going to get out of them, even though they are January 2000. And the reason why is because I like and I'm looking for the September run, the August run that last year was down. Dang it. I wish that hadn't been that way. But look, 2017, August through December, up to $30 it looks like. 29.99 from down here sitting at 22.87. What about August? 14.04 up to 22.15. August 14.60. It finished at 16.99. Doesn't mean I couldn't have maybe gotten out up here at the 17 range. August 14. I'm going to call it 15 up to 17.99. In fact, if I even go back to earlier, August, not all that great, 14.97 up to 15.93. So we do have some nice opportunity in Bank of America. I will lighten up, but I will play for Bank of America. I will play. Start playing the ranges, which in my 32, 26.50 and an August run up. Facebook, Leap, June 2020, 200 strike, long calls, plenty of time, great position to be in. We just talked about Bank of America, January 2020, 2021, $35, Leap, long calls. Baidu, right now, if I was going to be in Baidu, I would be paying attention to, let's update this one, to the 200-day simple moving average. Kevin, we're close to being overbought. I understand, but why is Baidu move? Why would Baidu move today? Any idea why Baidu might move today? or in the near future? Why would Baidu move in the near future? Where's Baidu? Pretty interesting. It got filled today, but you could do a September 20. A September 2000, maybe 2019. Yep, 2019. So you could do a pretty easy trade. September 180, 200 bull call for right now $7.95, and I paid $8.30, I think. Nope, I filled at $7.95. It's now trading at $8.30. Either way, even at $8.30, it's a pretty interesting trade. It got wrapped up in the China mess and can overnight bounce up to the 200-day simple moving average, which sits right now at 199.31. Disney, simple. Buy to open, stock positions. And finally, an analyst, which was Goldman Sachs, agrees that they should trade at 142. If you do a PE, a future PE, you can come up with anywhere between 151 to 156, maybe 158, and that's counting current valuations, not a Netflix type valuation. Good opportunity there as well. I don't know about timing on Disney, but there's a lot of opportunities to play nothing more than a China deal bounce. And time is getting short as you run up against the deal coming together. Time is getting short, but I still think we got a pretty good bounce. Pretty neat. It's just a little account, but pretty neat on 27,500. Yes, I've taken a little bit out, so it makes the account look better, but that's not exactly true. On, where's my calculator? I have no idea where there it is. My calculator. On 27,500. So I actually got to take, 11,423 divided by 27,500, excuse me. Looking at a 41.5% return. Would I ever again do this with my IRA account, $270,000? I would not. This is money that, in all honesty, I'm going to have to pay taxes on a home. Sold off the home. I had a slush fund in that 25 to 27,000 range. Has a pretty good return on it right now. But that's because obviously I've taken, $4,000 out basically for paying first quarterly taxes. It's a good run. It's a good run. And the one thing, that's what I was going to talk about. The one thing to understand is this. If You've had a good run. Be ready to protect those profits after the event occurs. In hindsight, I'm going to say it this way: pretty foolish to be rolling puts up, pretty foolish to be wasting your profits and put protection when all you have to do is follow the trend. A lot of people would ask me, well, wouldn't you protect your profits? And if you chose to, that's okay. But I would not be rolling up and spending my profits on protection in the last 2 to 3 months. I did protect through earnings. I gave myself enough time to bull put and try to lessen the cost basis, but I would not be rolling up every 2 to 3 weeks, put protection. You've just wasted your profit. You've overpaid for protection. You wasted your profit. You just can't do that. Guys, I appreciate you being with me today. I will get this posted here. It looks like this afternoon. Have a wonderful day. Don't hesitate to start to look at some of these positions if you know how to place these trades. These would all be wonderful trades for you in today's stock market. Have a wonderful day. Good luck to you. Let's see if China comes around here in the near future. And gentlemen, ladies, pleasure being with you this morning. Have a great day.